Hello traders at CMC Markets. Welcome to a short market update by RRG Research. Today we're going to take a look at the Dow Jones Industrials and the Nasdaq 100. It's going to be a short-term outlook, but in order to frame it correctly, I want to start with the weekly, then the daily, and then we'll go to the 30-minute chart to see what we can expect today and maybe tomorrow. If we start with the Dow Jones Industrials, you can see that the weekly chart is actually looking pretty good. The fact that we took out that overhead resistance area 34,500, 34,700, that was a pretty crucial level, and you can see that for the last 3 weeks we're holding up above that level. So that's the framework where we're coming from, an upward break over a pretty significant overhead resistance level in the Dow Jones on the weekly charts. Obviously we're targeting the all-time high level, which is around 37,000 roughly. If we zoom in on the daily chart for that, then we can see that same area, and you can see that it becomes a little bit more pronounced when you use daily bars or daily candles like here. It's not necessarily a fixed number, it's more of a range, and that's why I've put these two overhead resistance lines there so you can see where the market has actually peaked inside that range. So the rule is that after a break of resistance, that resistance level now becomes support. So for the Dow Jones Industrials, the most important support level now to watch is that former resistance range, and it starts coming from the top. It starts around 34,600 for the Dow Jones Index. What we can see here, which is giving us a quick signal or a small signal that the market's getting a little bit tired, is the fact that we're building up some negative divergence between price and RSI right here. The price has just ticked in a new higher high, and it's not confirmed by the RSI. That's usually the signal for at least a pause, maybe a turnaround. And if we talk about a turnaround on this daily chart, it will be a turnaround of this last move here, not necessarily a huge turnaround into a bear market. There's no question of that. And then if we zoom in on the 30-minute chart, and this is I'm recording this on Wednesday morning, so as the US market is still closed, but what we can see here on this 30-minute chart is that over the last few days a bit of a range has been developed. Lower boundary around 35,200, you can see that it started to work as resistance first. There was a peak here, then we broke out and we tested that level a few times. On the upside, we've been testing 35,500, 35,600, 1, 2, 3, 4, maybe 5 times if you count the last bit here last night. So if we put all of that together, then negative divergence on that daily chart combined with the push against that overhead resistance on this 30-minute chart probably sets us up for a bit of a decline. And while I'm recording this, Europe is actually down like 1.5% across the board. And if we look at the CFDs, where they're trading around 35,400, a little bit up, 35,460. So that is just above the lows of the last few days. So this is the first support level that we need to watch for today's trading. If you're a really short-term trader, I'd be looking for resistance around 35.6, 35.7, support around 35,400. A break on either side will give you a clue about the follow-through. Given the negative divergence on the daily, I think the ease of movement for the Dow at the moment is to the downside, and your best trigger is probably a break below 35,400. That'll target this is 35,300, and then most importantly 35,200. If we break that, we go into a bigger type of a correction, because 35,200 is that low that we have here, and if you can see, if we break that, then it opens up the way for a bigger decline towards that support zone as we've seen it on the daily and the weekly charts. So all in all, for the Dow, longer term outlook pretty strong. Near term, risk of a decline. If we take the same approach to the Nasdaq 100, and here's the weekly chart, and you can see how super strong this move has been. So it wouldn't be a surprise if we can see some sort of a correction here. The divergence here is building up on the weekly chart for the NASDAQ. It wasn't visible on the Dow, but it is visible on the chart of the NASDAQ, and you can see how that last bit of the rally has not been confirmed by the RSI. That is signaling some weakness. This is a warning sign for at least a pause or a bit of a turnaround. If we bring that to the daily chart, you can see that where the Dow was able to just nudge in a new high, NASDAQ actually put in a lower high day before yesterday, so that was Monday. No divergence on the RSI, there's nothing going on there, it's just between 30 and 70, so that's completely neutral. But here is that longer term breakout level, around 15, it's a rough area, 15,250, 15,300, but you can see that it's been tested a few times, and I've dashed lines here on a possible trend channel, but the fact that out of that last low the market's not been able to push back to the upper boundary of that trend channel is also signaling at least a bit of short-term weakness. So what are we looking for on this daily chart here? I think a break below the last low and below this previous high out of that channel, because when you do that, you're already out of that channel, will open up the way for a little bit more downside. So here also, longer term picture still good, but near term, we're running into some risks, and that becomes very visible when you look at the 30-minute chart for the NASDAQ. And again, this is recorded during European market hours, and the US market is not open yet. But the NASDAQ CFDs, they're trading around 15,560, which is again just above this, just below. It's in the area 15,600, 15,560, 15,600. So NASDAQ CFDs are trading in this area, in this horizontal area. If we open lower, it's very likely that we can see a follow through towards this support zone here between 15,350 and 15,400. The upside is way more difficult. So not surprisingly, the conclusion for the NASDAQ is quite similar to the Dow Jones Industrials. Longer term outlook for this market still pretty strong. We're going to see some short term weakness very likely, and on the 30-minute chart you can see that the upside potential is quite limited and there is quite a bit of risk to the downside. Thank you for watching this update by RRG Research, and I hope to see you again with a new update in the future.